Hey everyone, and welcome back to Motivation Library. You know how much we love diving deep into books that can help us unlock our potential, and today we're tackling a classic in the world of trading and personal development, Trading in the Zone by Mark Douglas.
This book is practically a Bible for traders looking to, well, master their mindset, which is so crucial in a field where emotions can run high, right?
Absolutely, yeah. I mean, we often think about trading as a game of numbers and charts and strategies, but Douglas argues that there's a whole other dimension to it, the psychology of trading.
Right. He kind of flips the script on us.
He does. So what makes trading psychology so different from just having like a positive attitude in other parts of life? You know?
Well, trading offers this incredible freedom, right? You can trade almost anything from anywhere. There's no set path, no boss telling you what to do.
It's like the ultimate entrepreneurial endeavor almost.
Yeah, exactly. You're in control. But that lack of structure, that very freedom, can actually make it really tough psychologically. Because we humans, we crave freedom, but then we also struggle with the discipline that's needed to manage risk when the possibilities feel endless.
It's like the more freedom you have, the more crucial self-control becomes, right?
Yeah,
And that's something that I think a lot of us can probably relate to even outside of trading, like with any goal that we're pursuing.
absolutely. And Douglas highlights this paradox that our fear of being wrong, which is perfectly natural, can actually make us worse traders. We hesitate, we second guess ourselves, and miss opportunities.
Definitely, yeah. You start doubting your analysis, thinking, what if the market proves me wrong? And it becomes, well, it can be paralyzing.
It is. And so Douglas talks a lot about this idea of taking responsibility. What does that actually mean in the context of trading?
I'm curious about that too.
Well, it's about owning every single trade that you make, the good and the bad, not blaming the market for our losses.
It's so easy to do that though, right? Like, oh, the news messed up my trade.
Yeah, right. The algorithm is against me. But that kind of creates this like adversarial relationship with the market. It's like it's some enemy we can't outsmart.
Yeah, and it prevents us from actually learning from our mistakes and improving, right?
It does. And it really ties into this idea of the reality gap that he talks about, this difference between how we think the market should behave based on our analysis, and how it actually behaves.
Yeah, so our expectations versus reality.
Right. Fundamental analysis can actually make this gap even wider sometimes. We analyze a company, decide it's undervalued and expect the market to catch up and agree with us.
Right, but the market doesn't always play by our rules.
It doesn't care about our opinions, and then we get frustrated, even maybe betrayed when it doesn't do what we think it should.
It's like we're trying to impose our narrative on a force that's ultimately beyond our control.
Exactly. So taking responsibility is about acknowledging that we can't control the market, but we can control our decisions within it, right?
Yeah, it's a subtle but powerful shift in perspective.
It is. And that leads us to another one of Douglas's key ideas, thinking and probabilities. And this is where I think things start to get really interesting.
This is where my brain starts to hurt a little bit.
Yeah, I get it. Because we're so used to wanting certainty, trying to predict that next big move.
Right, like what's the market going to do tomorrow?
But Douglas says consistent success actually comes from embracing the randomness of individual trades.
That's counterintuitive. How can we make money if we're not trying to predict every move?
It's like how casinos operate. They're not trying to win every hand of blackjack or every spin of the roulette wheel.
Oh, I see where you're going with this, the casino analogy. Always a good one.
They focus on the bigger picture. They have an edge, a statistical advantage. They know that over thousands upon thousands of bets, those odds are going to play out in their favor.
They're playing the long game, trusting the math.
Exactly. And individual outcomes, they are random, but the system as a whole is profitable.
Okay, that's starting to make sense. So instead of trying to predict every single trade, we need to develop an edge.
You got it. A strategy that gives us a statistical advantage.
And then we trust that it will work out over time, even if there are individual losses along the way.
Right. It's a big shift in mindset. And to help us with this shift, Douglas offers a really helpful framework. He calls them the 5 fundamental truths.
Okay, lay them on us. What's the first truth?
Well, the first truth is deceptively simple. Anything can happen.
Well, yeah, obviously, but
But truly internalizing this is huge because it means accepting that the market can do anything at any time for any reason or even for no reason at all.
it's like letting go of the illusion of control.
Right. We like to think we can analyze our way to certainty, but the market just loves to throw us curveballs.
It always keeps us guessing. Okay, so anything can happen. What's truth number 2?
You don't need to know what's going to happen next to make money.
So it's not about being right all the time.
Nope. You can make money even if you're wrong about individual trades. What matters is having that edge, that statistical advantage we talked about, and then letting it play out over a series of trades.
Okay, so don't need a crystal ball, just a solid system.
Exactly. And truth number 3. There's a random distribution between wins and losses for any given set of variables that define an edge.
Meaning, even with a great system, we'll still have losses.
Right. No system is perfect. There will always be some element of randomness.
So it's about accepting that losses are inevitable.
And focusing on the overall profitability of the system over the long term, not getting hung up on those individual wins and losses.
Okay, what about truth number 4?
An edge is nothing more than an indication of a higher probability of one thing happening over another.
It doesn't guarantee a win, it just tilts the odds in our favor.
Right. Like flipping a slightly weighted coin. You might get tails sometimes, but over many flips, you'd expect more heads.
Okay, that makes sense. And finally, truth number 5.
Every moment in the market is unique.
So even if we see a chart pattern that looks exactly like one we've seen before, the context is always different.
Absolutely. The players involved, the sentiment, economic conditions, everything is constantly in flux. We can't just rely on past performance to predict the future.
I'm starting to see how these 5 truths, as simple as they sound, really challenge the way most of us think about trading.
They do. They really do. But I'm curious, how do these truths actually help us manage our emotions, especially when there's real money on the line?
Yeah, how do we not freak out when we see a trade going against us?
Well, that's where the power of beliefs comes in. Our beliefs shape how we perceive the market, how we interpret information, and ultimately how we act.
So if we believe that trading is risky and unpredictable, we're more likely to feel fear and anxiety, which can then lead to bad decisions.
Exactly. Our beliefs act like these filters, coloring the way we see the market and ourselves as traders. If we believe we're going to lose, we might subconsciously make choices that confirm that belief.
It becomes a self-fulfilling prophecy.
Right. And Douglas suggests a really interesting idea. We can actually change our beliefs by transferring energy from less useful concepts to more useful ones.
So it's not about erasing our old beliefs completely, but shifting our focus to beliefs that align with these 5 fundamental truths that we talked about.
Exactly. Instead of fighting those old beliefs, we choose to focus on new beliefs that can actually empower us as traders.
It's like training our brain to see the market through a different, well, a more objective lens.
You got it. And I think this starts to give us a clearer picture of what it means to really think like a trader, but how do we actually put this into practice?
Right. How do we bridge that gap between, well, our current beliefs and the actions of a successful trader?
Well, that's where self-discipline comes in, and I think that's a perfect place to pause and pick up in part 2 of our deep dive.
Absolutely. Self-discipline, something we can all use a little bit more of. Stay tuned, everyone. We'll be back after a quick break to explore how to cultivate that crucial self-discipline and start putting these powerful truths into action.
Welcome back to Motivation Library. We're continuing our exploration of Mark Douglas's Trading in the Zone, and I'm really eager to dig into this idea of self-discipline that we touched on before the break.
Yeah, it's such a crucial concept, and I think something a lot of our listeners, myself included, can relate to. We can understand these 5 fundamental truths intellectually, but putting them into action consistently, well, that's a whole other ballgame.
It is. And Douglas is very upfront about the difficulty of this. He says, thinking like a trader means we have to embrace uncertainty and accept risk as just part of the game, and really focus on the process, not getting fixated on those outcomes. It's a whole new way of approaching the market.
That shift in focus from outcome to process, I think that's where self-discipline becomes really essential. Because if we're constantly chasing wins and fearing those losses, it's really hard to stay objective, stick to our plan.
Exactly. And that's where emotions come in. Those pesky emotions we all experience, fear and greed, and they can just wreak havoc on our trading.
Okay, let's break those down. Fear. I mean, that's probably the most common emotion that traders face, right? What are some ways that fear shows up in our trading, and how can we start to overcome it?
Fear can manifest in so many ways. Hesitation to enter a trade even when your system is giving you a signal, second-guessing yourself, exiting trades too early because you're afraid of a small loss turning into a big one. Sometimes it's just this general feeling of anxiety or paralysis when you look at the charts.
I think we've all been there, right? You see the market moving against you and your heart starts racing. You just want to get out, even if it means breaking your rules.
It's a very primal response.
Yeah.
Our brains are wired to avoid pain, right? And losses trigger that pain response. But here's the key. Fear is often based on these irrational beliefs and assumptions.
We might be terrified of losing money, but we haven't really accepted that risk is just an inherent part of trading.
Exactly. We can't win every time. And so Douglas suggests a really powerful reframe. Instead of viewing risk as something to be avoided at all costs, see it as the price of admission to the game. It's the cost of doing business in the market. Every trade has potential outcomes, both positive and negative. Accepting this upfront can actually help us detach from that emotional fear of losing.
That makes sense, shifting our perspective from fear to acceptance.
Right.
Okay, but what about the flip side, greed? How does greed sabotage our trading, and how do we keep it in check?
Greed is that seductive whisper that tells us to hold on to winning trades just a little longer, hoping for even bigger gains, even when our system says, hey, it's time to exit.
It's that feeling of euphoria when a trade's going in your favor and you're like, maybe I can squeeze out a few more points, even though you know you should probably take your profits and run.
It's the fear of missing out, but in a profit-driven way. And greed can be just as blinding as fear. It can make us ignore our trading plan, hold on to positions way longer than we should, turning a winning trade into a loser.
Ouch, yeah, I've been there. So how do we combat that? Is it just about having really strict rules and forcing ourselves to stick to them?
Rules are important, but it's more about aligning our actions with a realistic understanding of the market. One thing Douglas recommends is predefining your profit targets before you even enter a trade.
So you're not tempted to chase those ever-increasing gains because you already have a clear exit point.
Right, based on your system and your risk management plan, it takes the emotion out of the decision.
Speaking of things that can cloud our judgment, Douglas also talks about the illusion of control in trading. I think this is especially relevant today with all the data and technology we have at our fingertips. Can you explain what he means by that and how it can, lead us astray?
Sure. The illusion of control is this belief that we can somehow predict the market's every move. We spend hours analyzing charts, looking for those patterns that confirm our biases, right?
Yeah.
Thinking we've cracked the code.
Like we can outsmart the market.
But it's an illusion, right? It gives us this false sense of certainty and can lead to overconfidence.
So it's about accepting that we can't control the market, but we can control our own actions and reactions. It's moving from that predictive mindset to a more adaptive one.
Exactly. And that's a core message of the book, letting go of the need to be right all the time, focusing on what we can control, our entries, exits, risk management, and learning to adapt to those ever-changing market conditions.
It's a real paradigm shift.
It is, and it requires a level of mental toughness and self-discipline that just doesn't come naturally to most of us.
So how do we develop that mental toughness? Are there any practical tips or strategies our listeners can use to kind of build that self-discipline needed to actually put these principles into action?
Well, one key is to treat trading like a business, not a gamble. Have a clear business plan, define your goals, develop a robust trading system, and manage your risk like a professional.
No more flying by the seat of our pants chasing hot tips.
No, it's about being structured and disciplined, not just in our trading, but in our own psychological development.
Are there any specific techniques that can help us cultivate that discipline?
Visualization is a powerful tool. Mentally rehearse your trading plan, visualize yourself executing those trades with discipline and confidence, and it actually creates a neural pathway in your brain that makes it easier to follow through in real-time trading situations.
It's like training our minds to react in a predetermined way, even when we're feeling the pressure.
Exactly. Another technique is using affirmations, these positive statements that we repeat to ourselves to reinforce those desired beliefs and behaviors.
So I could say something like, I'm a disciplined trader, or I trust my system.
Exactly. By repeating these affirmations, we're essentially reprogramming our subconscious mind, aligning our beliefs with our goals. It's using the power of language to shape our thoughts and ultimately our actions.
I love that. But let's be realistic. We're all human. We're going to make mistakes, right? How do we deal with those inevitable setbacks without letting them completely derail our progress?
One of the most valuable skills a trader can develop is the ability to learn from their mistakes. Every trading error, if you view it objectively, is an opportunity for growth.
So it's not about beating ourselves up. It's about asking, okay, what can I learn from this experience?
Exactly. Instead of getting stuck in that emotional pain of a loss, what could we have done differently? How can I adjust my trading plan so I don't make the same mistake again?
Turn those setbacks into stepping stones.
Yes, embrace the process of learning and improvement.
This is all great, but are there any concrete tools that Douglas offers to help traders actually develop this winning mindset?
There is one in particular that he dives into. It's designed to help traders internalize the concept of probability and detach from the emotional roller coaster of individual wins and losses. He calls it the casino exercise.
And that sounds like the perfect place to pick up in part 3 of our deep dive.
Hmm.
We'll explore this casino exercise in detail and discuss how to create a personalized trading plan that aligns with your unique goals and risk tolerance. Welcome back to Motivation Library. We left off talking about this mysterious casino exercise, and I'm ready to roll the dice and see what it's all about.
All right, let's do it. Remember, this isn't about making you a millionaire overnight. It's more like rewiring your brain to think like a seasoned gambler. Not in a reckless way, but in a way that understands the power of probability, you know?
So taking the emotion out of the equation,
Yeah.
basically. Trading like a game of chance where we have an edge.
Exactly, exactly. Think of it like learning, say, learning to play the piano. You don't sit down and expect to play like Mozart on the first try, right? It takes practice, it takes discipline. You're going to hit some wrong notes along the way.
Makes sense. So this casino exercise, it's kind of like those finger exercise.
Yeah.
Building those foundational skills.
Right. Okay, so step one, you got to choose your weapon, your trading system or methodology, whatever your edge is in the market.
So this could be anything, right?
Yeah.
As long as it's clearly defined and testable.
Yeah. Technical analysis, fundamental analysis, whatever. The key is it has to have specific entry and exit rules.
So we can execute them mechanically without letting our emotions take over, right?
Yes. No gut feelings allowed in this exercise. We're trying to eliminate subjectivity.
Okay, so no gut feelings. Got it. What's next?
Now you got to set up your safety net, your risk management plan for each trade. How much are you willing to lose on any given trade before you pull the plug?
So like setting our stop loss orders.
Exactly. That's often a sticking point for traders. They understand the concept, but emotionally, it's hard to set those stops because it forces you to acknowledge that you might be wrong.
Yeah, it's that fear of being wrong again, right? Like, what if I set a stop and then the market reverses?
Exactly. That's what this exercise helps us overcome, that fear. It makes risk management just an integral part of the process, not something we try to, avoid thinking about.
Right. So we've got our system, we've got our risk management plan. What's next?
Time to put it all into action. You're going to execute a certain number of trades. Douglas recommends at least 20, following your system's rules to the letter.
No matter what, like even if we have a few losing trades in a row.
Keep going. We're training our minds to think in probabilities, remember. Just like a casino, we're playing the odds. We might lose on some individual spins, but over the long run, if our system has an edge, we should come out ahead.
It's about trusting the process, even when the short-term results aren't what we hope for. So how do we actually measure the success of this? Is it just about whether we end up with a profit after those 20 trades?
It's not about the money at this point. The real measure of success is whether you followed the rules without letting your emotions get in the way.
So we could have a net loss, but as long as we stuck to the plan, that's still a win.
A huge win. That discipline, that's what we're after. It means you're starting to detach from the outcome of those individual trades and focus on the process, the long game.
I'm starting to get it. It's like taking a scientific approach to trading, right? Testing the system, building those mental muscles.
You got it. You're moving away from emotional reaction to objective execution.
So once we've kind of gone through this exercise and internalized this probabilistic mindset, what's next?
Well, Douglas talks about creating a personalized trading plan, something that really aligns with your goals, your risk tolerance, your style.
So there's no one-size-fits-all approach to this.
Nope, definitely not. Your plan should be as unique as you are. It should reflect your financial goals, your time commitment, your risk appetite,
So what are some of the key elements that we should include in this plan?
Well, you got to outline your trading goals, right? What are you trying to achieve? Specify the market you're going to focus on, whether it's stocks or futures or whatever. Detail your trading system. That's your edge. And critically define your risk management rules.
So things like how much we're going to risk on each trade, our stop loss orders.
Exactly. It's like having a roadmap for your trading journey. And just like any roadmap, you got to review it and adjust it along the way.
This has been such a fascinating deep dive into trading in the zone. Really gets to the heart of the mental game of trading, which I think is something we often overlook.
It is. Trading is so much more than just numbers and charts. It's about mastering our minds, building that discipline and resilience.
Absolutely. And to our listeners, remember, this is a marathon, not a sprint. Be patient, embrace the process, and never stop learning. Until next time, happy trading.